In today's video, I want to chat to you quickly about shareholder or partnership agreements and why they're so important. My name is Heinrich from SA Accounting Network. I've been in the accounting industry since 2008, but I've also been an entrepreneur since 1993. This video forms part of a business mentoring program, so you're welcome. In the description of this video, you'll see there's a link where you can download a form, or you can go check out all the other videos that form part of this section of the business mentoring course. We're still busy with phase 1, which is the planning phase. So let me head down to my computer, but before I do that, remember to give the video a like, remember to hit subscribe, and let me just quickly talk to you guys about partnership or shareholders agreement and why it is so important. So I think shareholders partnership agreement essentials, why need one, and what must be in it. I think the reality is that many great businesses fall apart because of vague or missing agreements. Even friends and family fall out when roles, ownership, and exits aren't clear. A good agreement protects everyone involved. As I mentioned previously, that I've been in the accounting industry since 2008, and I think probably since then I can count on one hand the successful businesses where there's more than one owner involved. And one of the core things that all of them have in place is a properly structured shareholders agreement. So that is really, really important. It's not something, I think the problem when you start a business is everybody's excited to jump in and start contributing and stuff, but then 6 months down the line, they start becoming differences between different shareholders and partners. And if you don't have this thing in place, then it becomes a nightmare to navigate. So please, guys, that's why this video is important for you guys, just to stand still. So that's a reality of so why some businesses actually fail. So first things first, and I think when it comes to a partnership or shareholders agreement, it must be reviewed or drafted by a lawyer. You can go into ChatGPT and ask it, listen, pop out the shareholders agreement. Even in this video, I'm going to give you guys a free sample of a shareholders agreement. But please, please, please do take it to a lawyer. Make sure that they go through it and make sure that thing will be able to stand legally in a court of law. That's really, really important. And then the second thing that is also just as important is you must always ask your accountant to look at that agreement as well, just to make sure that what the lawyers put in there makes sense for tax valuation and compliance issues. Because that's one thing, lawyers quite often they've got a program where they copy and paste certain sections from one program to another program without them actually understanding what that certain section means. So just to take an example, let's say for instance you decide, or part of your agreement says that if there's one of the partners want to exit, then quite often those blanket agreements says that the valuation needs to be done by an auditor. So just for auditor to put a signature on a piece of paper is going to cost you 5,000 Rand without even starting to do a little bit of work. Where if you just change that to say that that the valuation must be done by independent accountant or business valuator, then it will save you thousands and thousands and thousands of rands and time just in the valuation processes. Just small things like that. If you send that agreement through to an accountant, say please look at this, does it make sense from a valuation, tax perspective, compliance perspective, so they can just get an eye on that as well. It's really, really important. I think I was speaking to one of my friends a while ago, and he got a job offer. They started a very successful business together. There were a couple of shareholders inside the business. He got an offer to do something else, and he says the nice thing about that, they had the shareholders agreement drafted before they even started with the business. And he said a very interesting thing is it's like drawing up a divorce settlement before you're getting married, even before you get married. So what he says, by the time he got that offer to exit the business, he opened up his bottom drawer, took out the shareholders agreement. That thing stipulated exactly what the exit strategy is for that partner to get out of the business itself. So that's why it's important. Like I said, it's like signing up a divorce agreement before you get married one day, so you know exactly what the steps are if something goes wrong in that partners or inside between different shareholders. So the basic details to cover in a shareholders or partnership agreement is the name, ID number, shareholding of all the parties, the company name, registration number, and the address of the company, and the purpose of the agreement and the business objective. So that's just the basic stuff. And I'm going to give you guys a checklist as well. So if you get a partnership or a shareholders agreement drafted, then you can go look at this and make sure that all these things are included in there. Otherwise, it might not be a valid shareholders or partnership agreement. Ownership and capital. It must mention there what each person contributes towards the company, whether it's money, equipment, or time, the clear percentage of the ownerships of the different shareholders itself, and then the process of bringing in or removing other shareholders. The roles, duties, and voting rights. So who does what in the business? So that's really, really important to make sure that you have that in writing, how decisions are made and what decisions need to have a full agreement, like hiring and major expenses. So quite often inside those shareholders agreement, it will say that whoever the person is going to be running the operations has got the right to interact with suppliers and customers up to a certain value. For instance, 10,000 rand, and anything above that value need to be approved by all the different shareholders. So I think that's really, really important as well. And can voting happen virtually or via email? Share exits and transfers. So what happens if someone wants to get out of the partnership or out of the company itself? What does the procedure look like? How is the business or the shares valued? And do other shareholders get first options to buy those shares if you do decide that you want to exit that business? Protecting of the business, non-compete clauses, for how long and for how far. So that's also really important, that if I decide, stuff it, I'm dick of you, I'm going to exit out of the partnership, for me not just to go open up the same business one block further down the road and just steal all my customers that we work together. The confidentiality clause to protect your clients, your suppliers, intellectual property, that's important. And the intellectual property clause as well as who owns what, the brand, the website, the products, and the ideas. So that's also really, really important to make sure that you include those inside your partnership or your shareholders agreement. Yeah, so here it comes. So what if you disagree? How does disputes get resolved? Through mediation and arbitration. If there's a deadlock between shareholders, use a buy-sell clause or a third-party decision. Avoid letting the business stall over fights. So I think just to put that down on paper as well as what happens in those type of situations. When it comes to money matters, how are dividends paid, how much dividends gets paid, and how often does it get paid? Are salaries for working shareholders and directors fair and agreed upon? And what is the plan for reinvesting profits back into the business? Right? That's important. Bonus clauses to consider. Drag along and take along rights. We're going to talk about that just now. What happens if one partner dies or becomes disabled? That is really, really important to make sure that you cover that inside your shareholders agreements as well. And what is the penalty for a breach of the agreement itself? Final thought. Handshake and good intentions are not enough. A solid agreement is how you protect your business, your relationship, and your future. Let me quickly show you guys that document that I prepared for you guys as well. Just the checklist that you guys can go use to make sure that if you get your shareholders agreement from your lawyer, to make sure that it covers all the things. So this checklist is designed to help ensure that your shareholders or partnership agreement covers the most important areas. This is not a legal document, but a simple guide to help you to review an existing agreement or to prepare one for the future. General safeguards. So have this agreement been drafted or reviewed by a qualified lawyer? Yes or no? If it has, well done. Then you tick the box. Has this agreement been reviewed by your accountant to ensure tax ownership in terms of makes financial sense? Tick the box. If it hasn't been reviewed by your accountant, send it through to him so you can have a look at that. Cost agreement essentials. So here we go. It's names, ID number, shareholding, and percentage clearly listed. The purpose of the business and objective of the agreement, the company name, registration number, address specified, capital and ownership, does each of the shareholders' capital and asset contribution. The percentage of ownership is clearly identified, and the process of adding new shareholders or changing shareholding, whether that is included in there as well. It's really important to make sure that you tick these boxes. The roles, duties, and decision making. What are the roles and responsibilities of each of the shareholders inside that business? So that's got to be defined. The process for decision making and voting, so including individual votes. List of major decisions that require full agreements, like asset sales, hiring directors, big expenses. What is that threshold before you need to have everybody's permission to do that? Share transfers, exit clauses, a clear process of a shareholder who wants to exit the business, the valuation formula or the buyouts that is included, and the preemptive rights of the existing shareholders. Protective clauses, the non-compete clause, the duration and geographical scope, the confidentiality and protection of trade secrets, and intellectual property clause for who owns what. Dispute resolution and deadlocks, mediation and arbitration clause, the deadlock resolution mechanism, where there's a buyer-seller clause or third-party expert clause in there, financials and dividends, make sure that the dividend policy is defined inside there, the salary and remuneration of shareholders, employees are agreed, and the profit retention or reinvestment policies are included as well. So that's really, really important. Other important points to consider is the drag along and take along rights of share sales, the duration of the agreement and the amended procedure defined, the termination breach of consequences clearly outlined. Final tip, an agreement that looks good on paper but doesn't match the business day-to-day reality is a recipe for trouble. They have both the legal and financial professionals reviewed it, and that's just part of the free business mentoring course. And you'll see on the next page, here's the sample. So here's the sample shareholder agreement. I said 1 May 2025 between John Doe and Peter Doe, and then you can see it's for Doe Cycles, the company registration number. The purpose of the agreement is to outline the terms and conditions governing the relationship between the shareholders, a South African company operating in the cycling, retail and repair industry. Ownership structure, there we go. Initial contributions, who contributed what the voting rights are inside the business, deadlock resolution. So you can go work through this thing. There's the intellectual property one, share transfers. So there they talk about the valuation of the business itself, drag along and take along rights. There we go. The non-compete clause, confidentiality, the dividend policy that they've got, employment remuneration, the breach and termination. What else we got here? The amendments, and then obviously the signed. So remember, this is only a template, guys. You can't take this thing and put your names in and sign it. This is only for demonstration purposes. You need to make sure that you get a professional lawyer, an accountant to draft this for you. Like I said, it's probably going to cost you 5, 10, 20,000 rand to do it up front, but I can promise you this is the best investment that you can make for the future of your business. Remember to once again give the video a like, remember to subscribe, and I'll see you guys for the next video.